Playing from Cat's iPhone.
What's up everyone, it's Scotty with Money Investing. Welcome on board for another Market Open live stream here. So we are seeing the NASDAQ, S&P, and the Dow Jones pulling back a little bit slightly with volatility slightly higher. Crude oil prices are going up also. Bitcoin's recovering, Ethereum's recovering. So there's a lot of movements here in the markets today. So as always, if you enjoy this, make sure that you drop a like and subscribe if you're new to the channel. So once again, welcome on board. Good morning. So has the power gone out yet? Not yet, but I'm sure it will go out sometime during this live stream because it has been an issue recently that, pretty much all the time I've been dealing with it. So once again, thank you so much for joining. We'll start the poll here, and it's going to be a shorter week because the markets were closed yesterday in observance of the Memorial Day weekend. So I hope you all had a really nice long weekend, but we are now ready to once again see what's going to happen here with the markets, and if we can continue on that momentum that we built from last week. Thursday, Friday were very green, so we'll see if we can actually build out that momentum. So still the red mic. I thought people were actually starting to like the mic here. We're starting to see that recovery, right? How much lower can we possibly go? Turns out there is a lot more potential downside that we'll see for the markets. We'll see. I mean, recession at this point is getting a more and more likely scenario for the U.S. economy, given just the state of the commodities market, given the state of the consumer. So definitely, if spending starts to come down, unemployment numbers are coming out later this week, so that should also be very interesting, and that should give us some more guidance as to what is potentially going to happen over the next couple of quarters here. So good morning from Los Angeles. So welcome on board. It's super early for you, so thank you so much for joining in this early. So Tuesday here, today we've got Salesforce after the markets close. We got Digital Turbine, we've got ChargePoint, and we got HP reporting their numbers. For earnings, I've already done videos on Salesforce and Digital Turbine. Both of them, I feel like they're quality companies. Salesforce, a little bit rich valuation. Digital Turbine, trading at a very reasonable valuation. And then tomorrow, we've got companies like GameStop, we've got Chewy, we got Hewlett-Packard, and then C3AI along with UiPath also reporting their numbers. And then to finish this week off on Thursday, we got CrowdStrike, we got Lululemon. Both of those companies, very strong, very quality names, but still trading at a rich valuation. We've also got RH and Okta reporting later this week as well. And of course, we've got the unemployment numbers coming out this Friday, which is going to be the first Friday of the month. So Russia hits back at the EU's partial oil embargo, says it will find other importers for its crude oil. So Moscow pledged to find other importers for its oil shortly after the world's largest trading bloc agreed to impose a partial embargo on Russian crude. So the European Union on Monday agreed to ban most Russian oil imports by the end of this year as part of the new measures designed to punish the Kremlin over its invasion of Ukraine. And the move was hailed by EU Foreign Policy Chief Josep Borrell, saying, and I quote, "landmark decision to cripple Russia, President Vladimir Putin's war machine," and it covers Russian oil brought into the bloc by sea, with an exemption carved out for imports delivered by pipeline following opposition from Hungary. And the EU's long-delayed sixth package of sanctions against Russia required approval from all 27 member states and has yet to be formally ratified. So obviously, oil prices are much higher. I mean, take a look at crude oil, up another 1%, trading past $119 a barrel. Brent hasn't really been moving all that much, right? So Brent is actually down 1.5%. It's been, trading at around $119, $120. So crude is actually going to be priced higher, very soon here versus Brent. And, obviously it's been pushing higher consistently. Now, the biggest question is who are going to be those other importers for crude oil? And that could, really come down to China, India, some of those countries that could see a little bit of imports at a discounted rate from Russia if, of course, US is putting an embargo on that crude oil. So that's obviously putting a lot of pressure on prices even further. And, that's one of the things that from a commodity standpoint puts more pressure into inflation and the overall picture of inflation. I mean, I just heard, over the weekend that in one place, somebody tweeted about this, in California, one of those places was selling at over $8 a gallon for gas. $8 a gallon. That is ridiculous. Like, when does this stop? Are we really going to head up to $10 a gallon? Like, that would be stupid. And yeah, that's the kind of situation we're all in with these prices just nonstop going up, and mostly because of these geopolitical tensions, as Russia is one of the bigger exporters of oil, and then obviously other countries putting sanctions on this, resulting in putting in more pressure on crude and Brent right now. But anyway, home prices here surged over 20% in March as interest rates also rose, according to S&P case Schiller. So your mic is loose or something? Is it really? Are you guys not able to hear me correctly? Just want to make sure that the audio is well, and just give me a thumbs up if you guys can see me or actually hear me pretty well. So, all right, reading further here, rising mortgage rates did not slow down rising home prices in March. So again, this is just one single read, doesn't really mean that it's actually going to be forming a trend. We will see how this affects the mortgage market, the real estate market, over the course of the next couple of quarters. This is only for one single month, but nationally home prices were up 20% higher than they were in March of 21, so year over year. Still a very strong growth here, according to S&P CoreLogic Case-Shiller Home Price Index, and that is higher than the 20% gain in February. So we're just up about 0.6% on a year-over-year basis. And the average 30-year mortgage stood at 3.29% at the start of January, and at the ended March at 4.67%. And the Case-Shiller's 10-city composite rose 19.5% annually in March, up from 18.7% in February. The 20-city composite saw a 21.2% year-over-year gain, up from 20.3% in the previous month. And for both national and 20-city composites, March reading was highest year-over-year price change in more than 35 years of data. So 10 city and 20 cities are going to be specific cities where this index is made up of, and they are also seeing significant increase in home prices. But overall, on average, it was up over 20+% on a year-over-year basis. And Phoenix slipped off from their top gainer spot for the first time in 3 years, with Tampa taking over. Tampa, Phoenix, and Miami continue to see the highest annual gains with over 34%, 32%, and 32% respectively. So very, very difficult to actually buy a house in those three places. And 17th of 20 cities reported higher prices increase in the year ending March 2022 versus the year ending in February 2022. So Dewey says fake news averages $6.50 per gallon. So it could be the average, but I'm not sure if there's any particular place where that's actually selling for over $8 a gallon. So yeah, obviously, it wasn't any source that was cited from the actual, news websites or financial media website. It just popped up on my Twitter where somebody posted a picture. They were at a gas station and they were looking at the prices, and it got up to as over $8 a gallon. So that was pretty ridiculous. So obviously we don't know if that picture was edited or not. So, but if anybody has any other information, if there's any places that are selling for higher, then obviously just let me know. But Mizzou reiterates Tesla as a buy. So looking at some upgrades and downgrades, Morgan Stanley names NIO as a tactical research idea. The stock has traded off lately, partially due to lingering concerns over the suppressed sales and amid lockdowns in Shanghai, which made up 15% of company sales in 2021. But right now, we're seeing a little bit of a move back higher as China over the weekend also announced that they are going to start to reopen back up slowly and steadily, and that's also resulted in the futures market pushing higher. That was green, but right now we're starting to see a little bit of a pullback once again as oil prices continue to push higher. Daiwa upgrades Zoom to outperform from underperform. We got Mizzou who reiterates Rivian as a buy as well, and then Jefferies reiterates Amazon as a buy, but they did lower their target to $32.50 from $3,700, adding that economic slowdown will hurt stocks such as Amazon. And Bernstein upgraded Grab Holdings to outperform from market perform as well. So that pretty much wraps up our morning market update here. Perfect timing. We're less than a minute, literally less than 10 seconds away from market open. So this could not have been better timing for us. There we go. We are now open. What great timing. I love it. All right, so NASDAQ here opened up slightly, while S&P opened down 35 basis points, Dow opened down 0.5%, and the Nasdaq is probably going to open flat. There we go. We're opening just flat here, up over 7 basis points. We'll open up our individual stocks as well. We'll also take a look at the options chain because I feel like there's going to be a lot of interesting deals, especially if you are looking at, selling covered calls 6, 7, 8 months out. The profit probability is going to be very nice for those companies. 30%, 40% is something that we can achieve. Like, for example, I sold a couple of covered calls on InMode. That's going to represent about a 31% upside till January. And then I do think there's going to be plenty of other opportunities very similar to that in the market right now. So Nvidia up 1.5%, back over 190 here. AMD back over $103. PayPal just slightly flat on the day. Google here up over 60 basis points. Tesla, look at that, 777. 777, so that's going to be the lucky number here, up over 2.3% on the day so far. Amazon up over 1%. And we got Meta Platforms more or less flat, with Apple here slightly up over 20 basis points. Crypto, talk about crypto here. Very nice recovery, right? So Bitcoin back over 31,000. That's what happens with cryptocurrency, right? In a blink of an eye, stocks, cryptocurrencies, Ethereum, Bitcoin just move up very rapidly. Over the weekend, it moved up over 10%. Ethereum was up 10% from $1,800 all the way back over $2,000. And Bitcoin also, went from about under $29, closer to $28,000. In fact, at one point, it was trading at roughly $25,000, earlier in May. And now we're back over $31,000 for Bitcoin. So very nice support here getting validated. And we're now starting to push right back up. Over the weekend, it was up over 7%. On that day. So very nice move to the upside for cryptos so far. We'll see if this actually does hold up, right? So NASDAQ here, we'll see if there's any buyers stepping in, but more or less just flat on the day. S&P and Dow are selling off a little bit more on the day right now. Dow especially, I'm surprised because energy is doing well. On days like today, value stocks tend to do really well, but what stocks are really selling off? We've got 3M, Honeywell, Johnson & Johnson, Pfizer, Merck, Coca-Cola, IBM, they're all down anywhere between 1.5% to 2%. So, for these value stocks to be down this much, there's definitely a lot of bearishness for these companies specifically, right? Pfizer is down 2%, Johnson & Johnson, Honeywell, 3M, Procter & Gamble, IBM, Coca-Cola, they're all down 1.5% to 2%. If you take a look at Chinese stocks here, so very nice green across the board. NIO's up close to 8%. We got JD.com up 7.5%. Alibaba almost back over $100, up 6%. So very nice move. They also reported earnings last week. Strong beat on revenue and earnings. Baidu here up over 5%. Li Auto's up 4.5%. So nice move for Chinese stocks here so far. And Amazon is getting some bids. Google is getting some bids. Tesla starting to fall right back down. So still up 1%, but more or less just holding that 760, 765 levels. All right, so where are we with our polls? Let's see here. 61% expecting the markets to be green today. We got 39% expecting the markets to be red. So there's a little bit of bullishness in the air right now. So we'll see if you actually close well, continuing kind of build up on that momentum from last week. The technicals still stand. I think the NASDAQ technical is still going to be standing here. So if I go over to the NASDAQ index, if you do want to, look at this chart and figure out if we've actually hit the bottom, I would just look at this chart, right? And this 50 EMA, if this level holds this month and for the months to come, right? If this level holds at the 50 EMA, which is sitting roughly at 11,000, 11,100, then that will be a potential bottom for the NASDAQ. If for any reason we see this continued sell-off, if you see this week, next week, continue to kind of, go down, and of course last week was very green, kind of snapping that streak, but we continue on this trend of weakness and we break down, then potentially there's more pain to come. So that is going to be our big technical support level to watch, because if you look at this chart overall, it's pretty self-explanatory, right? How well this 50 EMA has been validated very nicely. And the last time we broke down was during the Great Recession. So if you do break down for any reason, so far May has been nothing but so much indecision. If you take a look at this entire candle, this is for the month of May. And we've got, today is actually the last trading day for the month of May. So we'll see if we, still close with that doji candle. More likely we will. And that would represent a lot of consolidation, a lot of indecision for the markets. But that 50 EMA is going to be a nice support there. that means that we're still holding up onto that support. And then of course June is going to bring us some interesting activity as well, with unemployment numbers, inflation data, new FOMC meeting, GDP numbers, JOLTS reports. All that stuff is going to be super important for the market. So it's just going to be another round of all the circus here that goes on in the market. So we're kind of winding down on this monthly candle. On the month, we're down about 2.25%. So, if the Nasdaq can find a way to close green, maybe we close flat on the month. But so far, we are down about 2% on the month. All right, so what's moving up here? Apple down, AMD down, selling off. Tesla breaking even on the day. Amazon's for some reason kind of holding up over 1.8, close to 2%. By the way, Amazon split's coming up. That might be the reason why it's holding up a little bit. So, so Amazon's going to be splitting their shares on June 3rd, which is going to be a Friday. And then after the close, and then next week is when you should see all those shares allotted. And of course, trading to begin on a split adjusted basis as well. All right, let's take a look here. Upstart up another 3.3%. So let's just run through our watch list here very quickly. So we got Grab up 11.5%. They got a buy rating today. So Bernstein upgrades buy Grab holdings to outperform from a market perform. So a very nice move here. JD.com, Coinbase pushing up. Coinbase is up because Bitcoin had a really nice weekend. AMC's pushing up a little bit up over 5.6, close to 6%. They also mentioned they saw 122% increase during Memorial Day weekend in the box office sales for domestic. So that could be because of Top Gun. I haven't seen the movie, so no spoilers, please. So Top Gun sequel attracting more than 3.3 million viewers. And I've heard it's like a really, really solid movie here, like with great reviews and everything. So, that obviously acts as a huge catalyst for AMC from over the weekend, long day weekend, and right now it's up over 6%. So very nice move to the upside here. Alibaba 4.5% on earnings. So here, Mara pushing up on crypto. Upstart also up 2.3, close to 3%, so back over $51. Roblox, Tattooed Chef, come on. Oh my god, I might have to. They fly planes. Yes, I know. Those are like the fighter jets, right? It's what are they called, like F-35s or something from Lockheed Martin. Those are the ones that they actually fly, right? Which are pretty cool. I should probably just cut the live chat right now because I know there's gonna be a ton of spoilers coming from people who have already seen it. Come on, guys, don't do that. Don't do that to us. I should have never said anything. I know. I've seen it. I'm just kidding. I've seen it. So, anyway, Roblox flat, Astrospace flat, Tattooed Chef flat, Shopify flat, trading at 370. Tesla just turned negative, so it just went down. So Shopify here, more or less flat, just trading at 370 here. Enphase, Palantir, Netflix flat. So now we're starting to see a little bit more sell-off here in the markets, right? Look at those red candles coming in. Nasdaq down close to 75 basis points. We got the S&P down about 1%, and the Dow Jones down 414 points, down over 1.25%. So Dow obviously selling off a lot more than the Nasdaq on the day today. All right, let's talk about stocks. All right, guys, we can talk about movies in a separate live stream. Maybe I'll do like a separate movie live stream where we can talk about our favorite TV shows and movies. But let's just talk about stocks right now. So yeah, we're sold calls on InMode too, but only 2 months out. Would like to close soon and take the longer ones from January 2023 trade. Yeah, I mean, obviously, if the longer the expiration, the further you go out, the higher the premium is going to be. And that much higher the return is going to be for that stock. But the way I look at it is that InMode, which is already down so much from its all-time highs, 60-70% plus, and that goes true with a lot of companies, right? A lot of stocks that are down 40, 50, 60%. In fact, I was talking about this with one of our members. I mean, they're down 40, 50% from all-time highs. If you buy the shares here, or if you have a lower cost basis, you can sell covered calls 6 months, 7 months, 8 months out, and you can get those returns, higher premiums, you can get those returns 15, 20, 25, 30%. And I look at the premiums first. If I can get a premium with a 15% return or an 18% return, that is a very solid deal, because not only do you make money on the premiums, but if the stock goes up and gets in the money and then your shares get called away, that's even better, right? Then you're generating even a better profit on those trades over the next 7-8 months. So that's why, I went with InMode. That's why I have a covered call on Upstart. If the Upstart one actually does get called away at $55, that's my expiration. Then the total return is going to be over 70+%. So I'm actually going to be doing a video on this specific thing, and there's an options calculator that shows us exactly what we need to know, like maximum risk, maximum reward, the different probabilities, different outcomes. So I'll go over that, and I'll do like a private video for all the members, because I think it's going to be very useful. It's like a really, really important calculator that you can use for almost all strategies out there and figure out for yourself whether it makes sense for you to take that trade or not. So that's something that we'll be doing here. So lovely red. Yes, we're seeing the markets pull back here on the day. Look at those candles. I mean, down close to 5 here. What is it? So we're down over 125 points on the Nasdaq already, down close to 1%, and the S&P down more than that, and the Dow struggling to find a bottom here, down over 1.33%. Really interesting. On a day like today, you'd expect, the Nasdaq to be down more than the Dow, and yet the Dow is down a lot more. It seems like energy trade is really not helping the Dow all that much. The only two stocks that are green are ExxonMobil and Chevron. That makes sense because energy is higher, but everything else straight up pulling back here. So yeah, in the context of the overall trend here, we've talked about how the markets still need to do a lot of work. This is the overall downtrending channel, lower highs and lower lows. Next resistance at 318. So there's definitely a lot of work here the markets need to do. Obviously, last week was just a very strong week of recovery in the context of this overall downtrend. So any negative news? Well, things that we already know of. There was actually a very interesting report that I read over the weekend, and it's so strange because it kind of resonated with everything, like literally word for word. Let me just bring it up. All right. So let me see if I can actually find it, because it was so interesting. It was actually written by somebody on Stock Charts that right here. Okay, this is the one. So this was the report that I read, and if you read it, you'll kind of hear things that I've also mentioned before. So, all right, where should we start? All right, so counter trend rallies in a bear market can usually be described as sudden, severe, and seductive. They happen suddenly, with the markets making new swing lows one day and then ripping back to the upside immediately after. They're also usually severe, meaning they make up lots of ground in a relatively small amount of time. And why do they have to bounce higher so quickly? That's the seductive nature of these quick counter trend rallies. The FOMO is palpable as investors are afraid of missing the bottom, as if 200 S&P points would make a difference between amazing year and mediocre year. But here it is. I think here it is. So once this sudden influx of buyers has done their buying, the market sort of wakes up to the fact that conditions really haven't changed much in the last couple of weeks. All of the headwinds that have caused stocks to broadly decline from January into May are still there, right? So this goes back to our logic and our question, what's changed, right? What has changed? What has forced stocks to go up and for them to keep going up, right? And if the answer is like nothing really, and it's not completely true. I mean, last week we did see a little bit of shifts, right? So we heard about insiders buying, corporate buybacks getting up to over 1 trillion. We also looked at, from a technical standpoint, many stocks were oversold. We looked at the equity put call ratio getting up to 0.75. So those were some metrics that did result, in a little bit of a bear market rally. But for us to see a more sustained move to the upside, we have to ask ourselves a question, what's really changed, right? And has anything related to those headwinds when it comes to inflation and interest rates and Fed's monetary policy, for which Bostic also mentioned and a couple other members that, the expectations are going to start to come down, and after September we're going to see a little bit of a pause, but keeping all the facts intact, which is inflation still at elevated levels, interest rates are still expected to go higher, 50 50 50, at least for the next 3 meetings. And that, when you look at it from a economic standpoint and the consumer's spending shifting, those headwinds are still present, and it's really difficult for the stocks to have a sustained move to the upside, and then potentially rally back up to all-time highs. So that's why we see like markets get oversold. We see a little bit of a bear market or like a relief rally, and then we get to a point where, okay, have things changed? And if the answer is no, then there's not really any reason for the stocks to keep going up. Institutional investors are still going to be on the sideline. So right here, he says, so what is actually happening there? To be honest, this week's rally just makes sense. This is for the past week. The S&P 500 reached the 38.2% retracement on the March 2020, January 2022 uptrend almost exactly. And this is the level that we have also been tracking, right? So if you've been following up with our charts, we talked about the S&P 500 and the overall, fib levels, and this is the fib level that they're referring to, right? To come back here, 0.382 or 38.2%. We come down at 3,800 not once but twice last week, right? Same with the Nasdaq. We come down to those levels at 11,000, and this was a perfect retest before pushing right back up due to those oversold conditions. This right here, right now, resistance at 4,200 on the S&P, and the Nasdaq also has a level all the way up to 12,500, which we'll see if we actually get up to those levels. But it's normal for us to see some type of a relief rally, but to see more sustained moves, that really depends on the macro picture and what's changed from that perspective. If nothing, then it's difficult to see sustained rallies. If things do start to materially change, if inflation starts to come down, interest rate policy pivots, then sure, there's going to be a lot of potential for a sustained rally here. Alonso, do you have a video that goes over covered call strategy? Yes. So I've done a video on YouTube on covered calls, and the one on Patreon is actually going into a lot more detail. But I will be posting more videos on cash secured puts and covered calls, and going over the calculator that helps us analyze the profit probabilities and outcomes and all that stuff. So I will be doing more videos, but I do have videos on those already. All right, so let's see here. Yeah, due to oil embargo, so we read that earlier. Yeah, Chinese stocks are pretty green today, so that makes sense, Kevin, because they also lifted. Well, they didn't quite lift, but they are also easing up on the idea of reopening the economy and kind of getting back into the workforce, and manufacturing and production, all that stuff will start back up. So it's obviously a bullish catalyst for the overall Chinese stocks and markets. So Amazon here up over 2.67%, so ahead of the split, definitely going higher a little bit on the day despite the markets overall being red. Nasdaq here is still down 75, S&P is down 1, and the Dow Jones is down over 1.2. So Amazon definitely pushing higher. Arun, like and subscribe, and in Discord, sent you one question, bro, sent in Discord. Yes, I'll get to it as soon as I can. I do have to catch up to a lot of emails and messages, so definitely we'll get back to it as soon as possible. So it's been kind of swamped with a lot of videos here. So over the last couple days, I think we've done videos on Salesforce, Digital Turbine. I've done video on Costco, Adobe, and then a couple more stocks that I'm forgetting, which are reporting earnings this week. Also done videos on CrowdStrike and Lululemon as well. So a lot of individual company analysis, and we'll keep doing that more and more if you guys do bring up some more stocks. So yes, make sure that you guys drop a like. We've got over 400 people watching, but 90 likes. That is, not the best ratio. So that means, all right, let's see. So that means 1 in every 4 people, 4.5 people is actually liking. Come on, I need at least 3 out of 4 people to enjoy the stream. And if you do seriously enjoy the stream, make sure that you obviously drop a like. That would mean a lot to me and to all of us, right? To our community overall. So thank you so much for that. So, all right, let's just do a quick poll. And this should be an interesting one. And all right, so the question's going to be, will there be a recession in the US in 2022 or 2023? Let's just, over the next couple of years, like this year, next year, what does everybody think, right? Will there be a recession in the US either this year or next year, right? What is the consensus? I'm doing this year, next year because, this year, 6 months, 7 months left. And then, of course, next year. So 12 to 18 months, call it, for the US. So simple yes, no question because there's a lot of signs that are potentially pointing to a slowdown in economic growth, slowdown in corporate earnings growth. In other words, right now the market's pricing in a 9% growth in earnings. So from last year when we did $208, this year we're expected to do $228, right? So that's, let me just see, 208, 226, 227. So I think last year we did 209. Yep. So last year we did $209 in earnings per share overall. This year the expectations at 9% growth. If those expectations do come down, and then of course consumer spending starts to pull back, and unemployment for any reason starts to go higher, then those are some of the signs that we have to keep up with, right? Those are some of the tracking indicators that we have to understand in order to see if there's any chance, any potential for a recession in the US. So right now 75%, wow. So 75% expecting there is going to be a recession in the US either this year or next year, so in 2022 or 2023. So wow. And only 25% expect to not have any recession over the next couple of years. And I think right now in a very, very interesting, I think there should be a case study for schools for this particular economic environment because there's just so many variables at play. And I don't think there's any better way to learn macroeconomics than the current state of the economy and the markets, because there's just so many different angles that we can look at. And of course, even, professional economists and strategists and, hedge fund managers and money managers, it's all really divided, right? I mean, I mentioned in our Discord, from the same publication, you had two completely different headlines, completely different. And I, not only from MarketWatch, I also saw it from a couple other publications, Barron's and a few more ones, and you had completely different headlines. And that's how divided and confused obviously investors are in general about the state of the economy, state of the market, state of inflation. Inflation is like a really big topic about whether it's going to come down or whether it's going to keep going higher. So it's a very interesting time with so many different variables at play. And interesting to see, like, despite all of that, the S&P 500 is just not even at a bear market. NASDAQ obviously is hurting a lot more, but S&P 500 always finds a way to recover better. But anyway, so oil prices definitely, are putting a lot of pressure on commodities overall and putting a lot of pressure on inflation. One of the positive news from this week really is China kind of easing up on their COVID issues and starting to increase production and manufacturing and all that stuff once again. So that's good, but we do need a resolution from that geopolitical front. Like those are tensions that are just not showing any signs of going down, or there's no sort of consolidation or pullback in energy prices, because if they don't come down and if energy prices are sticky and they stay higher than total headline CPI, PPI, personal consumption expenditure, it's going to be a tough time for the Fed, because they can only control the demand side, right? They can't control the supply, which is another thing, the supply chain issues and all those things. So thoughts on Qualcomm. So Qualcomm, I will probably do another video on them, kind of like an update on this company. So where are we trading? So we are at 137, so down about 1.2, 1.3%. Overall, just a lot of consolidation for Qualcomm. This is a very nice support here for this company at 123, 124, around these levels. And resistance is going to stay put at close to 159, 160. The valuation's low for this stock, so They're trading at over 13 times earnings, under 4 times sales, 16 times cash flow. So definitely very, very cheap valuation, without a doubt. And, nice, consistent, decent revenue growth, earnings growth, share dilution is absolutely non-existent. So they're actually buying back their own shares every single year, which is always a good thing. So we'll do a video on this separately here. But right now, the analysts have a price target of 204. That represents about 47-48%. All right, so polls shifting a little bit, 78% expecting a recession in the U.S. over the next 6 to 18 months. And only 22% expecting no, sir, we're not going to have a recession. But Amazon kind of holding up. Apple here down over 1%. We got Nvidia down 1.3, AMD down over close to 1%. PayPal is down 1.6. Google is down pretty much flat here. And Tesla's down 1.2, down to 750. 750 is a very, very important support for Tesla. So, that would be a very strong support, at least in the meantime right now. If you come over to the daily chart, we have kind of bounced off of that $750 level in the past. Previous resistance in line with this support, 750 is a level to watch. So name some undervalued stocks, please. So I've actually done videos on this, Justin. So several videos I've posted over the weekend. My shopping list is available with my fair values. So make sure that you do check that out if you want to know about which stocks are on my wish list. What's their fair value based on my conservative estimates for growth and earnings. And that should help you get a good understanding on which stocks I'm personally looking at in the markets. So, all right, is it really lagging here? Hopefully it starts to get better. All right, let's take a look at SoFi. So SoFi needs to break above its 50 EMA, right? So 50 EMA is sitting roughly at around $8. So this right here, $7.75 to $8 is going to be that resistance level to watch for SoFi. Consistent downtrend of lower highs and lower lows. So that right there is going to be that level to watch for the company. So let's see if I can actually look at any type of covered calls on the SoFi. What is that premiums? What are those premiums going to be? So if you go out to January of 23, just up until this year, end of this year, so we're getting for $10, we're getting $1.05. So $1.05 divided by 7. So that's about a 13, close to 14% return on premium, like premium return on your cost basis, which isn't bad. 14%, and then on top of that, you get to sell the shares at $10, and you're buying at $7.50. So that would be an additional upside of another 33%. So 33% for the actual equity, and then you're collecting a premium, which gives you a 14% return. So, for me, that's not a bad deal at all. And if the worst case, what's the worst case, right? The worst case would be that you sell this covered call, or let's just say that I personally sell this covered call after buying the shares, obviously at 100 shares, so $7.50. My cost basis drops down to $6.50, right? So that's going to be my break-even price. So selling covered stock here, so that would be your break-even price around $6.50, right? So that would be the P&L at zero, $6.42, call it right here. So that would be your break-even price. And if you are bullish on, this is only if you are bullish on SoFi and you don't mind holding at around $6.50. That's, cost basis. That's why when I talk about Advanced Micro Devices, when I talk about Upstart, when you sell those covered calls, the cost basis comes down to some very attractive levels, right? For AMD, it'll be like in the 80s, and Upstart, it'll be in the 30s again. For Nvidia, that's something that I can look into as well. But those are some ideas that I will share in our Discord. I'll share some trade ideas like these in our Discord also. The like is for the red mic. So thank you so much. Yeah, markets today just not vibing today, right? They're just like slightly down, 1% on the Nasdaq. S&P just down close to 1%. Dow was down about 1%. So all three indices down 1%. It all depends where we close though. Last week was a very strong week, especially towards the back half, Wednesday, Thursday, Friday. And today, at least at the start of the open here, they're doing what they do best. So far this year, it's just been down and down and down. So what did the dollar price drop due to political issues? How will it affect the market? So dollar dropping is more of a risk-on environment move. If the dollar keeps going higher, that would be a little bit of a risk-off environment. So dollar has been going up, and we have seen a little bit of a risk-off environment where people obviously don't want to take on any additional risk. They want to move away from equities, move away from cryptos, move away from commodities. But I think we have seen the dollar index DXY get up pretty high and get rejected at 104, 105, around those levels. And if you take a look at the weekly chart here, very, very, very strong move in the dollar coming in since June of 21. So, this was the level that we also got tagged at exactly at the same time in February of 2018. And then, of course, we saw a significant move to the upside. And since March 2020, January 21, we saw a huge move down. And then, a nice 17.5% rally. So we're starting to come down a little bit, but dollar obviously has gotten a lot stronger relative to other currencies, other countries. So imports become a lot cheaper for the US. But at the same time, a lot of companies also do get affected if they do have any international, presence, such as Apple, Amazon. Like, these are global companies. They do get affected by a stronger dollar with respect to the emerging markets that they operate in. All right, so am I lagging again? So let me know if the video is lagging. Hopefully it gets better. So VIX here up 5.5%. The volatility is just really frozen and lagging. Okay, well, I guess we'll just call it there, everybody. Audio is clear, but I'm lagging pretty heavily. So I guess we'll just call it right there. But once again, thank you so much for joining. I really appreciate it. I'm going to jump over to our Discord and share some ideas there for any of the stocks that might look interesting. But, as always, make sure that you drop a like. Mike says, by the way, loved your fair value video. Huge help. Thank you. I appreciate that and glad you enjoyed the video there. If you want to get access to the entire Excel spreadsheet, it's also available for download, which I'll update, and I'll also share like a Google spreadsheet for that as well. So thank you so much, everyone. I really appreciate it. Make sure that you drop a like. Let's see if we can get up to 300 likes at least. Subscribe if you're new to the channel. We're trying to get to 69,000 very, very soon. And make sure that you also check out the links down in the description for our Discord and our Patreon. Alex, I'll see you in our Discord, right? So I'll see you in there. But again, thank you so much for joining. Have a great day, and I'll see you guys first thing tomorrow morning for another Market Open live stream. Take care.